Good evening, everyone. Thank you for joining us for this 19th episode, right? For our monthly astrology and global trends talk, where we will forecast the energy and also the potential happenings, events, global trends events in the upcoming month, which is January 2024. In January 2024, actually is a month of kneading through or biting through a tough obstacles. I will show you what it means later on. It's quite interesting. The hexagram also is quite interesting that depicts this. This is our outline for the talk agenda. As usual, we start with the introduction, disclaimer, and then a brief recap of last month's forecast and the influence of the five elements energy, including the hexagram in January 2024, and also what are the forecasts of January 2024 based on the research done by PC on geopolitical finance. We will end with a summary and also a Q&A if anybody has any questions. The disclaimer here that we would like to put up is this content is purely based on our global trends study related to Chinese astrology and also research for you to use as a guideline in your investment decision. We would like to we would like you to exercise cautions in investment, especially in such volatile situation, and also do your own research on what you want to invest in. This platform, we will not give any stocks advice. Let's recap on what happened in the month of December 2024. Actually, month of December, next year we know that is a wood dragon year. And month December, the pillar is also a wood red. And the wood energy, the heaven stem energy already starts to come in already, even before February 4th. February 4th, the Li Chun or the arrival of spring is always the transition of energy from the year before to the next year. So next year's dragon year does not start on February 10th, which is the Chinese New Year, but it starts on February 4th. And if you have any babies that born after February 4th, is considered as a dragon baby. Okay. So in December, is the year pillar is still Kui Mao or water rabbit. It means water is strong. It will give rise to the wood itself. Okay. And also seawood is also a rock wealth. So it's actually quite a conflict month as well. So you can see that I have forecasted that breakthrough in technology, more conflict in different parts, and more unrest in different parts of the world. And the hexagram is stagnant reception. That means it will be like a new beginning with the chia coming in that grows things. And I also actually advised that that time it was a time for you to grow. When I presented it in last November, okay, the energy came quite fast. If anyone had taken the advice in November, they would have reaped the reward in December. Unfortunately, I also got it wrong in terms of the potential stagnation of down index. Okay, where this year it's moved to one of the highest. It was like 37,000 points, right?
Yeah, yeah.
Yeah, 37 point something, if I'm not mistaken. So actually, when I check and do my own research, I asked why the Dow index has moved to the highest. It states that the inflation is down, which I doubt so. because every month we go through the global research, we know that what truly goes on. And strong corporate training, earning. Yes, I believe that, because some companies like in AI, in technology, yes, their earning has triple, has double or triple. Okay, but not every company. It's only selected few that is aligned to the era, to the new era of fire. Okay, and also due to economic strength. I would really doubt that it's really due to economic strength. However, that is the narration that we get to boost up the down index. But whoever, reap the profit, I think it's going to be like a windfall also, in a way. Okay.
Um, Evelyn, I think going back to where we got wrong,
Mm,
actually we didn't really get it wrong, you know. Let me
mm,
explain. Inflation is down because it is managed in such a manner that it's down. Now, during the past few months, they actually have put in that the inflation for insurance is down by 30 over percent. Now, insurance actually have gone up and not gone down, but because it remains in a very low subset of the components, therefore, you know, it is being uh, just put down a figure.
mm,
Okay.
mm,
Now, the other thing is that if you follow shadowstats, .com, where they actually trace back the calculation of inflation all the way from the 1990s, inflation is still actually double digit. So the inflation is managed down by the government because they do not want to raise interest rate anymore. Okay, and because there's a lot of distress in the uh, in the banks. And later on, I will share in my slides why the Fed decide to pivot, okay,
mm.
from being hawkish to dovish. So I will explain that in a while. Now, strong corporate earning, I think, is also a bit of a uh, interesting news that I managed to get, that people really go into the details, especially Nvidia. Nvidia actually had like 200 or 300% beat. So people actually trace back Nvidia where the chips are being sold. So the chips apparently are being sold to some entity that is created by Nvidia to that is actually development of AI. So that entity is a subsidiary of NVIDIA, and that subsidiary is buying NVIDIA chips. So it is like selling back to your own company, okay? And the other thing is that people also trace, because NVIDIA also lists a number of partners. So what happened is people really took the time to really track down all these partners. And some of them are actually a small industry in Singapore where it imported a lot of AI chips. So they were saying that this company, even though is Singapore is not even a major
Hub,
AI
AI hub.
AI hub,
Mm,
but they imported so many chips. So then they also tracked another one to IT store. I, I think in either in Taiwan or in China. I think probably in Taiwan because Nvidia cannot sell to China. So it was also buying a lot of AI chips, just an IT store. So these people they were saying that either Nvidia is uh, boosting the share higher because it allow all the top management to actually sell their shares. And in fact, Nvidia actually recorded a lot of the top management selling their shares during the months of um, uh, during the months after the announcement of the Q3.
mm,
So that is why some people are saying that some the data the bid may not be as strong, but because it's selling back to its own subsidiary, and also there are challenges that Nvidia could be bypassing the sanction by selling through, let's say, small entities, which they then, repackage and sell to China. So NVIDIA is one topic that in the Twitter sphere is very active. People accusing NVIDIA, of not being transparent. Now, the economic strength, uh, people also have analysts have also go through the 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 US GDP, and they found out one thing. Now, in the US, if let's say you are actually owning a house, okay, and you are paying the monthly installment. So what the US have taken that as, since you are already owning a home, by right, you should be paying a rental. But because you own a home, you no need to pay a rental. Therefore, they use the home ownership and work out and rent equivalent, okay, and then they put it as the GDP. You
Oh.
know what I mean? So then the GDP got inflated.
Mm.
And because if you own a home, you actually no need to buy anything already, because your home is there. But then they still work it out that anyone who owns a home should actually be paying a rental equivalent. And that
Oh.
rental equivalent is then built into the GDP.
Mm.
So that's why we may not be wrong after all, because there are a lot of shenanigans with the data,
Mm.
and because of that, people are exposing it, very frequently now on the Twitter sphere, and that's why you later on you say, your topic will say about a lot of truth being proof bombs
Expose. Yeah.
being released into the market. So
Mm.
this is what is happening. Okay, so we may not be wrong, but because the data is managed such a way that it's an election year next year. Therefore, they do everything they can to tell that the economy is being positively navigated, okay, to a soft landing. Everything is okay, But actually, if you go into the fundamentals here, the number of homeless people in the US has just reached a new record high. How can that? How can the economy be so strong while the number of homeless just shot up to a record high? And the other thing is that more middle income group have moved down to the poverty line.
This is
So
not surprise. This is in line with period nine. I already say ma, the
yeah,
middle
so that
income will
that is
be
why,
move up or move
yeah,
down.
so that's why we may not be wrong, okay, because other data is already showing. And if you want to go for a comparison, yeah,
Mm.
Germany is already on the verge of recession, but
Mm.
its stock market still went into a new high.
Yeah. It
So
went the other
that
way
that
lah.
is the yeah, there's no more correlation, yeah, between a stock market that's entered into a casino phase and the underlying fundamentals of the economy. And therefore, you know, that casino is going to burst at some point in time. But I don't think it will be some people are saying that it's going to be a huge crash, but other people are saying that it is going to be, gradual decline over a certain period. And after that, people looking back, they will say, my gosh, it has gone down so much. So there will not be any huge crash according to some momentum strategies.
Okay.
But there are also some economists that predict that there will be a crash. So it will be very interesting to see who comes out on top.
Okay. I from the energy standpoint, maybe we will share in the astrology talk, the annual one, that for our members that I would think is more of a gradual decrease. Okay. So yeah, because last month I stated that maybe the down will gradually go down, but yes, move up instead. So that's with a lot of manipulations. I think they will also try to get the stock market to the highest possible. This is why I always say, if you have profit, take it. That's all.
later on, I'm going to share something very interesting, that
Mm.
is called the Dow to gold ratio, which actually would measure the real money in the stock market. But you go ahead, okay?
Yeah,
Next
okay, okay.
slide.
Yeah. I also know that US, they also printed a lot of money to introduce to the market. Okay.
Yeah.
So in terms of technology, as we say, that there will be breakthrough. Um, there is breakthrough in terms of the quantum computing technology, where the challenges of superposition and in multiple states that which we are unable to control now that they have such capability to control the states in what they want so that it will become a more powerful computations when the at the atomics level. Okay. And also I think in AI driven discovery there are also polycrystalline materials which is important for AI chips has been this one has been discovered that will also pave the way for an AI era as well. Okay. And in military, I think we have a lot of that. PC will go through that. Even I think North Korea also and South Korea also have some conflict. And last month, I stated that the conflict will be focusing on the East, which is, now in North Korea and South Korea started to see sign of unrest and military activities as well. Okay. So let's go through the month, January 2024 energy. Uh, in the January, energy is actually Yi Chou, which is the soft wood or the yin wood, and the Chou, which is earth. Okay, this is actually ox, or we call it Chou. The Koi water actually will create more of Yi wood. Okay, and also the Chou here. That's why in terms of here, the earth will be weakened where government weakening, as we can see, rules and regulation changing, and also is predicted that there could be potential slowdown of the stock market after the bull run in December. Okay? And the month hexagram is biting through. Hexagram number 21 is actually very interesting. How you see this hexagram is you see these are actually, this is mouth, top and bottom lips. These are all teeth. And this is a piece of something inside the mouth that you have to bite through. Okay, maybe bones or whatsoever that you have to bite through. And this is actually a 整卦, a thunder. That's why here the thunder is this one. That means it's bound for quite big changes. That's what thunder is. Or in other words, some practitioner they call this hexagram punishment as well. It signifies biting through a tough obstacle in the global trends.
Evelyn,
Yeah,
Evelyn,
yeah.
biting through something, if let's say it's biting through a bone, then I think we have a hard landing. If biting through tofu, then maybe we have soft landing.
Okay, okay. Yeah, okay. So this is not tofu. This one is a solid line. Okay.
Okay,
Yeah,
okay,
it's a solid line means that it's something that is a tough obstacle, already said. Then potentially the
okay.
truth will reveal. There could be justice and correction in this wisdom. So there will be like professional society issues. Many movement is trying to uncover the truth. I think you already stated my Twitter and all these are people are trying to uncover the truth. This is why I say, take profit wherever you can. Okay. Yeah. Okay. Over to you, BC. Maybe you would like to share your own deck.
Okay,
I
sure,
can stop
sure.
sharing. Yeah.
Okay. Okay, so in one of the trend forecasts, I mentioned that the bond market could be in trouble in December. But what we had was the Fed coming out and say that they will actually pause its rate hikes and then projected 3 rate cuts in 2024. So in some way that the bond market turmoil did not materialize, okay, and the bond market rallied and was saved by the Fed. Now, if we look at it, the Fed especially has been very concerned about the bond market because number one, the US interest payment on debt has already reached is already at the $1 trillion level. And with more new debt being issued over the next year, expected to be about 7.6 trillion, that interest on the debt will actually reach about 1.5 trillion. But now the interest rate has come down, it will still be more than a trillion. So I think the Fed has been pressured by either Yellen or the Biden admin to actually look at helping the government reduce its interest payment on debt. And that was why the Fed decided to pause. But there is also a lot of issues why the Fed themselves would have decided on pushing down the yields. But let's explore where we got right. Now, as of 20th December 2023, the Magnificent Seven, okay, the few technology stock that is holding up the S&P, okay, is up 75% year on year, while the S&P 493 is up just 12%, a difference of 63 percentage points. So that goes to show that all the money is being plowed into the most crowded trade. And when all these Magnificent Seven, they are having PEs that are, some of them even 100 over, okay, or 70, then that means that to really earn that much, yeah, is equivalent to that profit need to be maintained, okay, or grow for the next, 70 years or so. So that is why it becomes very unrealistic. So, and then there are cracks in the financial system, and it has become more noticeable. The BTFP has reached a new record high of 131 billion. Now, the BTFP was organized in March 2023 for a period of 1 year to help the banks, which actually saw 4 banks, okay, being closed down. So that's why the Biden admin came up with the BTFP. So that program will end in mid-March 2024, after which the banks have to start to repay their loans. So, but then, the banks are not worried. Okay, with only a few months to go, they still continue to borrow at a record level. So that goes to show there's an underlying structural problem with a lot of the banks. And of course, most of it could stem from the commercial real estate market, where a lot of properties are being sold at 45 to 50% discount. Okay, and that means that the loans that originally the banks were lending, let's say was worth 100 million, and subsequently they cannot pay the loan. So what they did, okay, they sell off the building. Okay, so that actually destroyed the value of the loan. Now, also there were massive bank layoffs, which have been announced in the month of December. Now, if let's say the banks are in good condition, the banks wouldn't have announced thousands of layoffs. That means that the banks themselves are having some problems already. And month to date, in December, US government debt has increased by 50 billion to 33.94 trillion from 33.88 trillion in November, with another slew of auctions slated from 26 to 28 December 2023. So the debt continues to mount. We forecast that China will continue to unwind its holdings of US treasuries, and it did. So its total holdings now amount to 770 billion, down 8 billion from a month ago. So Fed decided to pause its interest rate hikes in line with our forecast and surprised with 3 cuts projected in 2024. So that's why I say, whatever that comes out from the mouth of the Fed, I think those of you who have followed me over the past year, I've always said, watch what the Fed does, not what it says. And what the Fed say cannot be trusted. All the while from Ben Bernanke, where he said that there's no problem with the housing market, which led to the global financial crisis, and to Powell, who says that uh, inflation is transitory. Okay, there's no worry about inflation. To Yellen saying that there's not going to be another crisis in her lifetime. So whatever the Fed says, don't trust them. And all the Fed officials have been saying higher for longer. Okay, and so what? Okay, now it has now changed. But right when they say higher for longer, it's supposed to be for many years. But right now, seeing the financial system having some cracks, they actually decided to do an interest rate cut. So in 2024. So where has the higher for longer gone? Okay, so never trust the Fed. Now the Atlanta GDP forecast for Q4 is now at 2.3%, weaker than 4.9% achieved in Q3, in line with our expectations that Q4 will be weaker than Q3. And we predicted that Europe faces the risk of slipping into recession. And here are the headlines, okay, from a number of news outlets, okay. And EU food inflation remains high at 6.8% in November, but has cooled from 7.6% in October. Food inflation in Europe could get worse. Why? Because I think in the members area, I already show you the plan whereby they are going to cut about 50 fertilizing processing plants over the next few years. So when you cut the fertilizers plant, so where are the agricultural or the farmers are going to get their fertilizer from? And obviously, they have to import it elsewhere, and import would definitely be much more expensive. And therefore, it will be reflected in the price of food itself. So there is also more regulation imposed on masses, okay, which revolted against their government policies, especially on agriculture, immigration, and Middle East crisis, among others. So if you go into YouTube or Twitter or any of the social media, you can see that a lot of people are demonstrating against what is happening, okay, in the Middle East. So China economy indicators retain their growth momentum and resilience despite its sluggish real estate. And I think 2 sessions ago, I showed you a chart that the real estate is being wind down, but heavy and high-tech industry is actually moving up. So that is actually good for the economy, because any economy that that thrive on speculation, be it stock market or the real estate, is not good, because you need a productive economy that is manufacturing goods, and that such an economy is able to sustain itself in the long term. So if, let's say, you look at the US economy, it's very debt-based, and because of it being debt-based, there's a lot of financialization of assets, and it thrives on derivatives, it is thrive on leverage, and also, it thrive on the government continue to print a lot more money. So and it all goes into speculation, not into the real economy itself. So that is not so good. So China heavy industries continues to outperform. especially in shipbuilding, automotive, and renewable industries. So China continues to enjoy trade surpluses as we uh, uh, forecasted, and more tension in South China Sea and Middle East as predicted. So let's look at the US economic indicators. So CPI was up 0.1% month on month in November. Year on year, it grew 3.1%, down from 3.2% in October. Core CPI came in at 0.3% month on month in November, and year on year, it grew 4%, unchanged from October. So you can see that the year on year remain unchanged, but the Fed is already, changing its tune. So that means that what the Fed does will be eventually result in the weakening of the US dollar. So if the US dollar weaken, that means the cost of goods importation and the cost of resources, raw materials will actually increase. And that means that inflation would return. So PPI was unchanged month on month in November. Year on year, it gained 0.9%, down from 1.2% in October. Retail sales came in at 0.3% in November, and year on year, it gained 4.1%. Much of the retail sales were driven by buy now, pay later, and net retail sales less CPI was 1%. Now, what does it mean buy now, pay later? So the spike in the retail sales in November was driven because all the major retailers like Walmart, Target, they are encouraging consumers to buy household goods, which has a credit term, okay? So this, of course, when it has a credit term, people will rush and buy because there's no need. I need food, okay, because of inflation. Last time I need to save on my food, but now with this, buy now, pay later, I can have more food because I need to only pay later, and later to me, I may not live, I may not be able to indulge myself, okay, later. Might as well I indulge myself now, okay. So because of this, a lot of the retail sales actually went up, but actually this is just another form of debt, okay. There's no real money that is being spent, okay. It's just debt, and that is why it can be very bad for the retailers when a lot of people, if they are buying food on credit, means they cannot afford food already. So that means that somewhere along the line, just won't be able to pay up. And therefore, it will be bad for the retailers. So industrial production fell, okay, not fell, yeah, rose. Industrial production rose 0.2% month on month in November, and year on year, it fell 0.4%. The NAHB index came in at 37 in December, down from 34 in, it's up from 34. So the index actually have improved. This is the National Association of Home Builders. So the index came in stronger in December, but then it's still in contraction. So housing starts rose 14.8% month on month in November, while housing permits fell 2.5%. So existing home sales, sorry, I just changed the figure without changing the text itself. So existing home sales rose 0.8% month on month in November, but year on year it fell 7.3%. New home sales plunged 12.2% month on month in November, and year on year it rose 1.4%. So PMI for manufacturing went into contraction to 48.2, while services remain in expansion at 51. So if we look at it, the US is a mixed bag of data. Okay, but what is more interesting is the Conference Board Leading Economic Indicators, or LEI, which saw its decline continuing in November, dropping 0.5% month on month. And this is the 20th straight month-on-month decline in the LEI, the longest streak of decline since layman, where it has 21 months of declines out of 23. So year on year, it fell 7.6%. So, of course, the Fed decision did caught some people by surprise because people expect the Fed to pause, but then they decided to project 3 interest rate cuts in 2024. But since the Fed has started projecting 3 interest rate cuts, analysts have actually gone back to some of the fundamentals of the economy, and they are actually forecasting 6 interest rate cuts in 2024. And that was why we saw the US dollar falling back to the DXY, okay, falling to 101 from about 105 before the Fed pivoted. Now, I think the most concerning part is that, is with regard to the BTFP loans, which have reached a new record high, so of 131.34 billion, up from 114.09 billion a month ago. So you can see that it actually has a very steep climb here, okay? And by mid-March 2024, the program will come to a stop and banks would need to start servicing the loans. And according to Business Insider in November, the unrealized losses among the US banks were 620 billion. And some news that I came across suggested that the loss could be as high as 680 billion as of December. Now, this could be the reason why the Fed paused and projected interest rate cuts in 2024, a move which could help the banks stem the losses. Now, why the banks actually have unrealized losses was because of the treasuries that they held, which saw a decline in value. Because if yields go up, and yield being inverse to the value of the bond, therefore, if yields go up, means the bond value have actually dropped. And these banks actually hold the bonds as assets in their balance sheet. So if the price drop, that means they have unrealized losses. Now, one of the key things that just now Evelyn said that earnings were strong. Okay, yes, among the banks, earnings were strong, but then they actually have a trick. Okay, that is unrealized losses are not marked to market. So that's why the banks, they say, oh, we have so many billions of profit. If let's say, the losses were actually marked to market, then a lot of the banks are in deep trouble. But then they allow banks not to mark to market for unrealized losses. So that's why, these are hidden, okay, and not accounted as actual loss themselves. But the other thing is that the unrealized losses also came from the destruction of the commercial real estate loans, because the value of the real estate has dropped, and therefore the loan actually saw a decline in the value of the loan, because the real estate doesn't command that kind of price anymore. So I think this is one of the reasons that the Fed is very concerned about the unrealized losses. And if let's say they don't start to help lower the unrealized losses through interest rate cuts or by narrative to force the price of bond higher, then it could be a problem when they actually stop the BTFP program. Now, a lot of hypotheses are also there that the Fed may not stop the BTFP because it could endanger the banks if, let's say, it's cut suddenly. So that is why they see that it may be extended for for a certain period, maybe another year more, to allow the Fed to actually cut interest rate and therefore lower the unrealized losses further. So in a way, that is a stealth QE, okay? And that means that because of that, the chances are the stock market can still have some legs to move up, although not all the companies would actually see that kind of move up, because like I say, the Magnificent Seven will outperform because the other 493 will actually underperform. So what is more concerning about the 493, okay, that are just barely up about 12% year on year. So the other thing is that this is the unrealized losses. Okay, so this is the latest figure that is in, maybe I should just change this one to 680 in December. So this is the latest unrealized losses in December. Okay, you can see that it's already 680 billion. Now, the other thing is that the Fed losses. So the Fed actually lose money, okay? So, and how does it incur this? Now, here it mentioned that the Fed is on target to incur more than 130 billion losses by the end of the year. The losses happen when the Fed pays out more interest via bank reserves, money market funds than it earns, which are the treasuries and MBS that it holds, okay, in its assets. So the losses are parked as deferred assets, which will be paid down when the Fed returns to profitability. And the losses, however, do not affect the Fed in any ways. They can still do whatever they want, okay? It doesn't matter, okay? But if, let's say, the Fed continue to see tremendous of losses, it will still matter because it question, okay, the people's confidence on the ability of the Fed to continue to function in the way that it does. So if the Fed cuts, then the amount of interest paid out will gradually reduce, thus stemming the Fed losses. So they are also very concerned. And why are they concerned? Because the Fed is not a government agency. The Fed is run by private banks. They are profit driven. And what are the private banks? Banks like JP Morgan, Citibank, okay, they own the Fed. And if, let's say, they are in there to make money from the financial system, from the Federal Reserve System, but with this kind of loss, they cannot stomach it. So that could be another reason why the Fed need to pivot, because they need to stem the losses, okay? Because otherwise, they don't get any earnings. The Fed wouldn't have any earnings to distribute to the private banks. Now, the other thing is that consumers delinquency rate, okay? That is very worrying. Last month, I shared with you the chart about consumer delinquency in multifamily housing, which have reached its highest level since the global financial crisis, while the delinquency rate of delinquency growth rate in credit card is higher than even 2008. But this is what is happening. You can see that the credit card borrowings or credit card debt has actually been moving higher and higher, just as interest rates are actually moving higher. That means that delinquency rate of consumers will be much higher. Okay, so the consumers are under stress. So here you can see that the delinquency rate of multifamily housing have reached its highest level since the global financial crisis. Okay, and the default growth rate of credit card delinquency is even higher than the financial crisis. So the consumers are tapped out of credit. They got no money. Okay, how are they going to service their loans? And that is why the Fed is worried, because if the consumer cannot service their loans, then that means that they cannot pay their mortgage, they cannot pay their credit card loan, the default rate will actually skyrocket. And if let's say the default rate skyrockets, then a lot of the banks will be in trouble. Now, the other thing is that the businesses themselves are also under stress. Now, this is the amount of bankruptcy filed to date in December of 516, which is slightly below 2020 of 518. And during the height of the financial crisis, still some to go, but there are some weeks in I think this is until November, not December. So there could be some more here that could put it as the third highest, okay, among the third or fourth highest, okay, among maybe 2010, 2011, and 2020. So what could happen to the US in the month of January? Now, the stock market seems to be overbought.
Mm.
Okay. But the rally could sustain further due to expectations of an early cut, especially if economic indicators weaken. So it has become something that bad news is good news for the stock market. You know, it means that if let's say the economic news are poor, then what happened is that the Fed would cut, and therefore the stock market would do well. So I think there are indications that it's certainly overbought. But then, you know, it could happen in such a manner that the few first 1 or 2 weeks may see the stock market continuing the rally, but the second half could see it softening. Um, because I think it could be driven by several things, because it could be geopolitically related, it could be financially related, because one bank could certainly announce that they are in trouble, and then the fear factor comes in again. So let's see how is it. But at its stance, it's overbought. But I think the rally can still sustain a bit more because of all the expectations of an early cut. Now, financial stress in the system remains, and some banks may show signs of weakness, especially pertaining to unrealized losses. And recently, there are a lot of talks in the Twitter sphere about some derivatives that has actually uh, blown up, okay? And when it comes to derivatives, it is not something that we can say is in the billions or trillions, okay? Derivatives are actually in the quadrillions.
Oh,
That means
oh,
15 zeros.
oh.
Okay, so there's a lot of chat in Twitter sphere that they say somewhere certain derivative trades have actually blown up, and that is why they are trying to cover it by trying to push the stock market higher. So that's what I watch on the Twitter sphere, but so far no one has proof of it, but there were a
Mm,
lot of chatter in that regard. So Fed will increasingly turn dovish as signs of trouble in the financial system bubble to the surface. And that's why the stock market will think, okay, let's go up higher. Now, do not forget that in 2007, when the Fed started to cut, the stock market actually went up higher. But in
mm,
2008, the stock market actually crashes down. So these are the kind of behavior that normal, how a casino behave, okay? The stock market is like another casino right now because sentiment has all been too overly positive. There's a lot of greed in the stock market right now.
mm.
So you
That's
need
why I
to caution
say,
yourself. Yeah,
that's why I
yeah,
say
go
take
ahead.
profit.
Yeah, because the similar thing happened in 2007 when the Fed realized that something is really bad with the housing market. They start to cut interest rate. But then everyone is saying, oh, they cut interest rate, that means let's be bullish. And then 28, everything just collapsed.
Mm.
So um, we can see the sign maybe in 2024, it can still go up, but 2025 will be more unsettling in that sense, perhaps. So US government run away that binge may hasten the de-dollarization process. China could see further divestment of its US Treasury holdings. Now, USD could weaken further, but the ECB will likely mirror the Fed by turning dovish, which could lend support to the US dollar. So the ECB would be saying that, my gosh, the Fed was saying higher for longer, and then suddenly they decided to cut in 2024. Our European economy is actually a disaster. Why not we also start to cut? So if the ECB cut, then of course the US dollar would actually move up in the DXY. So that is something that could happen if the ECB mirror the Fed. So gold will likely perform well in such a scenario. What is interesting to watch will be the Dow to gold ratio, which could be trending down. Now, that goes to show that if the Fed prints more money, the stock market may go up. But in terms of real value or real money that is in the stock market, which if we use gold to measure, then that ratio could be trending down, which means even though the stock market looks high, but in terms of the ratio, the stock market to gold ratio, it could be trending down to even at one time, it reached 1-to-1 level. Okay, that means that if let's say the Dow trend, the Dow goes up to, let's say, 40,000. Okay, if a 1-to-1 ratio, that means gold will go up to 40,000. If let's say the stock market continue to go up. Now, unless the Dow starts to fall, in which sense, if let's say it's a 1-to-1, let's say the Dow falls to let's say 25,000. Okay, then gold would 1-to-1 ratio would be 25,000. Now it has happened before in history. Uh, uh, this is not just simply plucking out from thin air. So that means that in terms of real value, there is, the Dow no longer has a very high real value. It's just like in Venezuela. Okay, Venezuela stock market keeps on bursting record high because of inflation. But in terms of gold value, gold has become such a scarcity that its value is even much higher. So that is a kind of scenario when inflation breaks all the rules and then it goes into hyperinflation. And that is when the Dow and gold ratio could actually narrow down. So this is something that has happened in history. So it increasingly looks like we are pushing towards a credit event as banks lending tightens. Now, the banks have never tightened so much before, okay? But then they are not lending money. So that's also another reason why the Fed is very concerned, because if the Fed is not, the banks are not lending money, then there's no debt to fuel the growth. We all know that the global economy is actually fueled by debt. So economic indicators will continue to point towards overall weakness, as strength in a few is overwhelmed by weakness in others. So sometimes you have a mixed bag of positive, but the underlying negative is much greater and therefore overwhelms the positive. So economic indicators in Europe, German manufacturing PMI came in at 43.1 in December versus 42.3 in November, while services came in at 48.4 versus 48.7 a month ago. And France manufacturing PMI came in at 42 in December versus 42.6 in November, while services PMI came in at 44.3 versus 45.3 a month ago. UK manufacturing PMI came in at 46.4 in December versus 46.7 in November, while services PMI came in at 52.7 versus 50.5 a month ago. So looking at this, it seems like France is even in a deeper trouble, okay, because they saw a weakening whereas Germany has seen a strengthening, and UK is still doing much better because they still have the services which is in expansion. So the contracting in the manufacturing sector shows that the deindustrialization of Europe will become a major thorn in its economy, especially the Eurozone. And according to S&P Global, Eurozone's PMI data are roughly indicative of its GDP, falling on a quarter-on-quarter basis at a 0.2 to 0.3% rate in the fourth quarter. Following a 0.1% contraction in the third quarter, the fourth quarter decline will push the Eurozone into a technical recession. So even the S&P Global is anticipating that, whereas we have anticipated it for a few months already, that the industrialization in Europe will soon become a major factor that will affect its future GDP growth. So Q3 GDP was negative 0.1%, and we can see here if we follow the change. Now the quarterly GDP is already at negative 0.1%, but then if you look at the PMI, it actually has been deepened, okay, over here. Ever since the Q3 GDP has been announced, but there has been a far deeper fall in the PMI, and therefore that's why S&P is anticipating that it will take a leg down in Q4, and therefore we will see a technical recession in Europe. So Eurozone CPI came in at 2.4% year-on-year in November, down from 2.9% in October. UK CPI came in at 3.9% year-on-year in November, down from 4.6% in October. So the CPI seems to be improving. Okay, inflation is actually falling, but with the ongoing diversion in shipping to a much longer route via the Cape of Good Hope in South Africa, inflation could reignite in Europe, especially when it also impacts the shipment of energy during the current winter months. Eurozone retail sales was negative 1.2% year-on-year in October, and negative 3.6% year-on-year net after inflation. So UK retail sales was positive 0.1% year-on-year in all these are actually November. So UK retail sales positive 0.1% year-on-year in November, negative 3.8% year-on-year net after inflation. So sometimes I use to measure it net by taking it into consideration inflation, because once you build in the inflation, then you realize that the increase in sales could probably be due to increase in prices, may not be necessarily be in the increase of consumption in terms of quantity. Okay, so that's why I actually take into consideration the CPI and then look at the net retail sales. So the current strength in the euro versus the US dollar has helped to reduce the inflationary pressure in Europe. It has also made the cost of goods cheaper because DXY went down, means that the euro has strengthened against the US dollar. Now, this could change due to the rerouting of shipping in December, because if let's say, if the shipping takes a longer period from instead of through the Suez Canal, but they have to go the round trip around Africa, then the shipping cost will actually escalate, and because of that, the inflation would actually go up. So with the expectation that inflation would go up, then the ECB might not want to mirror the Fed okay, because inflation has suddenly spiked up again. So that means that the euro strength could still be maintained. So a lot of choice, not much choices for the ECB is, either if they mirror, then inflation would go up, but with the rerouting of shipping, inflation would go up even more. But if they maintain, that means that the the credit in Europe continues to tighten, and therefore its economy will continue to suffer. So here is the container shipping rate. Okay, you can see that this is the period when the Houthis were targeting the shippings, the ships in the Red Sea. You can see that container shipping actually spiked up by almost 25%. So what could happen in Europe? Now, PMI seems to suggest that Europe could face another month of challenging economic conditions as inflation returns. The ECB could follow the Fed and ease its monetary policy, thus ensuring that inflation returns with a vengeance. Okay, so if the Fed decides to ease, then inflation would actually goes up higher because the euro would have weakened. Widespread demonstrations will prompt governments to control the masses, but this will backfire. Already they try to make it illegal to demo. Okay, so the democracy and freedom, all this, you realize that it's just a narrative that they use when they want to impose something heavy on developing countries. But when it happens in their own country, they will impose a lot of restrictions against demonstration and freedom of expression. So already the population is revolting on a number of issues pertaining to agriculture. If you go on to YouTube, you will see that in Germany and in especially in Germany, the farmers are bringing their livestock manure and they are dumping it in front of the parliament. Okay, so these are what the farmers are retaliating against. So there's a lot of restriction on agriculture, and there's also in politics and immigration. So the AfD party in Germany, which has won a lot of local elections, they are now under pressure by the government by stating that they are they are extremists and so forth. Okay, so it's always a narrative. Okay, freedom and democracy when it's much easier to impose on others, but when it happens in the country, politicians would still want to retain power. So this will likely continue for much longer than anticipated. So Europe is turning protectionist in its trade with China, and this could hasten its deindustrialization and increase the inflationary forces within the continent. So they want to say that it's unfair for China because they are previously they have a trade surplus with China, but right now they have a trade deficit. So they want China to buy more LV bags, okay, buy more red wines, buy more champagne, but they wouldn't want to sell China ASML, DUV as well as EUV, which actually carry a much higher value. Okay, so now they are complaining that China uh, has a trade advantage. So at the end of the day, China produce so many things. Okay, and right now, especially in Yunnan, it's becoming well known uh, as a red wine producer, okay, as a wine producer in China, because a number of uh, experts from France actually found out that the soil in Yunnan is similar to France, and they have brought their winemaking expertise into China. So, you know, China is also producing wine right now. Okay, how many? China cannot be importing trillions of LV bags, okay, or Gucci bags for that matter, because the Chinese actually the spending in luxury goods overall globally have been in decline. Okay, and how much bags can China keep on importing? China actually need those uh, high tech as well as high-tech equipment from Europe, but because of the sanctions, they are unable to sell to China. So right now they are blaming that China is taking advantage of them. Now, the other thing, if they impose tariffs on Chinese-made EVs into Europe, what will happen is that if China retaliate against Mercedes-Benz, BMW, Audi, okay, then, the Europe will hurt even much more. And perhaps because of the automotive sector fearing of all these tariffs, a lot of them have actually, form alliance with Chinese companies because the Chinese companies have the technology, especially when it comes to autonomous driving and in terms of battery, whereas the German car manufacturers, they are good at design, they are good at aesthetics, they are also good in terms of the production. Okay, so that's why they are forming alliances. Just in case that if there is retaliation, then their brands will not be hurt in China because they are in alliance with Chinese companies. So, but then that means that the manufacturing from Europe is moving to China. Okay, so there is a lot of things that the Europe is following its sanctions, following the US sanctions and imposing the same on China. It's not going to help them. Okay, if they really open up their economy, and they are selling the high-tech equipment to China, then the trade will be balanced off because China has a thirst for technology. So that's why with all this going on, Europe trade with China will remain in deficit. Now, when it comes to China, CPI was a negative 0.5% year-on-year in November, down from 0.2% in October, negative 0.2% in October. Core CPI came in at positive 0.6% year-on-year in November, unchanged from October. PPI came in at negative 3% year-on-year in November and down from negative 2.6% in October. Now, because of all this set of data, we have a lot of economists from the Western media stating that China is in a deflation. China would soon enter a depression. Now, who in the first place, consumers like us, want to have inflation every year? If we want, what we want is preferably that's a lower price even, okay? Because we want to have more purchasing power. If let's say the price comes down for whatever we have in our the amount of money that we have, you can purchase more if let's say the price actually comes down. So why would anyone want to wish to have inflation? So some people say that because the price is coming down, therefore it is showing that there is deflation in China. Well, if let's say there's deflation in China, by right, it must be accompanied by a destruction in consumer demand. Okay. But right now we have retail sales coming in at 10.1% year-on-year in November and up from 7.6% in October. So how can that be deflation? And some economists like to look into history, okay, and says that well, that's what happened in the Great Depression. It started with falling prices. Yeah, okay, but that was also caused by a destruction in consumer demand, and therefore prices continue to fall. But that's not happening in China because if we take the same yardstick in measuring the core CPI in the Fed, okay, the Fed is wishing that for the core CPI to come down, okay, but then the core CPI in China is still up, it's not falling down. So therefore, the narrative actually fails, okay. And the other thing is that industrial output went up 6.6% year-on-year in November, up from 4.6 in October. So the economy is firing on all cylinders. Industrial output up, retail sales also up. Services sector gained 9.6% year on year in November. Up from 7.7% in October. Now, China fixed asset investment went up 2.9% year on year during the period from January to November 2023, unchanged from the period from January to October 2023. China's survey urban employment rate stood at 5% in November, unchanged from October. PMI manufacturing sector came in at 50.7 in November, while PMI for manufacturing sector came in at 51.5, which signaled a expansion. So China's international trade in goods and services totaled 3.7 trillion in November. Exports of goods came in at 2.1 trillion and imports hit 1.6 trillion, resulting in a surplus of 0.5 trillion. Now, the other thing is that a lot of people are saying that imports in China has been very weak. And therefore, that means that, consumers are not consuming like before, because consumers must be, if consumption is very high, that means import must be very high. So you can see that there's a lot of contradiction. On one hand, they say that falling imports means lower consumption, but then retail sales actually went up. The other reason why imports is not continue to grow up to grow at a very strong pace is because China is manufacturing a lot of the goods itself. Okay, for example, China cannot import technology, okay, from Taiwan, from Korea, Japan, and the US. So what it does, it produces its own. So that is why as China produces more of its own, the previous pattern of having to import would gradually wind down. Okay, and because China continues to expand its manufacturing, that means that it can start exporting what it previously doesn't have. For example, like chips. Now that the US is very concerned, okay, because they are worried that China will use the opportunity that it has right now in manufacturing the legacy chips, okay, those 28 nanometer chips, and dump it in the market. So they are very worried because right now China is manufacturing a lot of 28 nanometer chips. And that is the kind of chip that is normally used for military equipment. So when the US says that they are imposing restriction of China from having to achieve 5 nanometer, 7 nanometer for military use, is actually all BS. Because military use, they can use 28 nanometer. There's no need for 5 nanometer or 7 nanometer. So it's just a reason to actually prevent China from growing its technology progress. So these are all, again, narrative driven. So power usage in China climbed 11.6% from a year ago to 763 billion kilowatt hour in November. Power consumption by primary industry increased by 12% year on year, while power consumption by secondary and tertiary sectors rose by 9.8% and 20.9% respectively. Residential power usage saw year-on-year increase of 10% to 93.6 billion kilowatt hour. So central government collected 9.17 trillion in revenue, up 6.9% year on year, and local government saw revenue increase 8.7% to 10.84 trillion. Tax revenue total 16.84 trillion in the first 11 months, up 10.2% year on year. Now, if you look at the power consumption and tax revenue, then it reinforces the expectation that China's total GDP for 2023 could be within reach of IMF's target of 5.4%. Now, on the other hand, tax revenue in the US actually dropped. So if let's say tax revenue in the US actually fall, that means that its GDP is actually not very strong, right? Because if let's say the GDP is strong, therefore there will be more activities, companies make a lot of money, and then there will be opportunity for government to tax higher. But if let's say there's a tax that is falling, but then how come US companies are announcing higher earnings? Now, higher earnings is different from higher profit, okay? Because throughout the years, ever since the Fed started printing a lot of money through QE, a lot of companies have been doing share buybacks. So when they buy back their share, the amount of share in circulation becomes very low. And even though you have a profit decline, but the number of shares actually decline, then you still have very good earnings. So that's why, you see that you just have to look at the headline news. Every time it's reported, it is reported as earnings beat. They never say that net profit beat. It's always earnings beat. Why? Because everything is based on the assumption that higher earnings means higher profit, but that is not the case. If let's say there's higher profit, it certainly will mean that the tax revenue will be much higher. But if let's say there's a falling tax revenue, that means that net profit has not been growing, but but because of the share buyback, it results in higher earnings. So this is something that you need to discern. Sometimes if you look at a company, do not just look at its earnings, but look at its total net profit, whether there is growth in the net profit or not. Okay. Now, then China's technology and heavy industries continue to grow. Now, China's commercial vehicle sales jumped 44.6% year-on-year to 366,000 units in November. And during the first 11 months of this year, China commercial vehicle sales stood at 3.67 million units, up 21.8% year-on-year. China's output of power batteries and storage batteries saw the output reaching 87.7 gigawatt hour, up 40.7% year-on-year. In the first 11 months, the output rose 41.6% year-on-year to 698.7 gigawatt hour. The sales of batteries came in at 84.2 gigawatt hour in November, up 12.3% month-on-month. In November, production and sales of new energy vehicles hit 1.07 million and 1.03 million units respectively, up 39.2% and 30% year-on-year respectively. China mobile phone shipments climbed 19.7% year-on-year to over 29.16 million units in October. 5G mobile phones account for the majority of October shipments, totaling 26.44 million units, marking a 35.5% year-on-year growth. In the first 10 months, total cell phone shipments edged up 4.2% to 230 million units. Domestic brands continue to dominate China's mobile phone market, with shipments rising 7.2% to 18.01 million units. So actually, Apple is seeing declining sales on a quarterly basis in China. And China is actually one of Apple's largest market. But then you see that the stock market just don't care of lower sales in China, but then they are more enthusiastic about Apple's sideline business, which is actually in fund management. Okay, that's why they say that Apple has gone from a tech company to become a fund manager, because they have a lot of cash and they use their money to generate returns, not so much in terms of breakthrough technology and such. You can see that the difference between iPhone 15 and iPhone 14, there's nothing major changes in it. Okay, but when Huawei introduced their Mate Pro 60, you can directly connect, okay, to the satellite for communication. So there's continued weakness in China's real estate market. Investment in property development cooled negative 9.4% year-on-year in the first 11 months of 2023. Investment in residential buildings amounted to 7.89 trillion, down 9% year-on-year. Commercial housing sales shrank -8% year-on-year in terms of floor area to 1.01 billion square meter. In terms of value, commercial housing sales dropped 5.2% year-on-year to 10.53 trillion. So nothing fantastic about it. It's still a major thorn, okay, in its economy. Major Chinese cities continue to report falling home prices in November. The National Bureau of Statistics said that 70 large and medium-sized cities saw month-on-month declines in both new and second-hand home prices. In the four-tier first-tier cities, namely Beijing, Shanghai, Guangzhou, and Shenzhen, prices of new home edged down -0.3% in November, while prices of resale homes dropped -1.4%. Home prices in 31 second-tier cities and 35 third-tier cities in general also went down in November from a month earlier. The sluggishness in the real estate market will continue for some time, but recent cut in deposit rates by China's four major banks could spur some buying activities. And just a few days ago, a major project launched in Shenzhen, where the property price, I think, was valued about quite high. I think it's in the millions of renminbi, okay, was fully sold out. So I think people are seeing some value right now because even the first-tier cities have seen some decline. And then the government has cut down the deposit required. Previously, it was 30 to 40% deposit. Right now, it's 20 to 30% deposit. Now, in terms of technology, besides what Evelyn have mentioned earlier, there are some breakthrough coming out from China in that China here, Yahoo Finance mentioned that China poised to break 5 nanometer barrier because its processor is currently being used in its laptop, and blacklisted Chinese chipmaker SMIC is working on 3 nanometer process technology despite US sanctions. And then we have a China commercial rocket launches small returnable spacecraft to orbit. Now, this is a private company, and it is following closely the footsteps of Tesla. What could happen in China in January? Now, China's economy will likely remain strong in January, driven by domestic consumption, heavy industries, and technology sector. China's PMI manufacturing could be borderline between contraction and expansion as heavy industries. Some performance is offset by a sluggish real estate. However, recent news suggests that the government aims to tackle the issue, which include building affordable housing for the masses. EVs export will continue to power ahead in January as the major producers expand their footprint aggressively overseas, especially in ASEAN and Latin America, especially in Brazil. China trade surplus will stay in positive territory as imports growth likely decline as population and businesses opt for local products. Increasingly, local share of products in the automotive and smartphone sectors have grown. And in terms of geopolitics, let's explore some potential military conflicts. Now, Russia is poised to expand the war in Ukraine. Putin has alluded to this in his recent press conference, which lasted more than 4 hours a week ago. I believe if you have watched the clip, he did mention that in Odessa, everyone speaks Russian. Okay, so that is indirectly hinting that Putin will be gunning for Odessa. And I think, as I always expected, will eventually link to Transnistria. So eventually putting Ukraine into a landlocked country. So NATO could be delivering F-16s to Ukraine in the near future, which Russia threatens will retaliate should NATO bases be used to launch attack against Russia. Increasingly, analysts are speculating that NATO will be forced to put boots on the ground should Russia continue to capture more territories in Ukraine. So here, Moscow Times announced that they just Russia claims to have captured another Ukraine city. So in terms of the involvement of Yemen in the Middle East conflict has shattered the US invincibility as European nations shun being part of a coalition to patrol the Red Sea. Iran has threatened to close the Strait of Gibraltar via its proxy and the Mediterranean Sea unless Israel stops bombing Gaza. And this could escalate the situation further. So if you look at it, here is one choke point, which Yemen's now threaten the entire shipping lane. And here is also another choke point, which ships need to pass through. Okay, if they have rounded the trip from Africa, they need to pass through here into the Mediterranean Sea to get their goods unloaded in the southern ports of Europe or in the in Turkey and in Israel. So if let's say these two choke points becomes a problem, then inevitably we could see a widening of the conflict because that is when it will spread to an area here and not just restricted to here. So this is an event that could actually become very dramatic should these two choke points materialize. Now, the other one is tension between China and the Philippines, which has escalated with both parties accusing each other for the escalation. The Philippines have recently conducted joint military exercises with both the US and Japan. The conflict in South China Sea is another instigation by the US to contain China via its proxies. So you can see that the US always uses its proxies, like in Ukraine, okay? And eventually, the whole of Europe suffer as well, okay, because Europe has deindustrialized because of the sanctions against Russia, making energy very expensive. And because of that, a lot of the industries in Europe have actually shifted overseas or have shuttered down altogether. And in January, Taiwan will have its elections. If the pro-independent candidate William Lai wins, cross-strait tension could escalate. Unless William Lai declared Taiwan's independence, war in that front is unlikely. However, a win by William Lai could mean further loss of preference trade with China. And China, I don't think will attack Taiwan. It will play the long game, but it will actually put pressure on Taiwan's economy because Taiwan's major trade partner is actually China. And the other thing is that Venezuela has laid claim on the Essequibo, which has become the latest flashpoint in Latin America. The Essequibo was awarded to British Guyana in the Paris Arbitral Award in 1899. No citizen of Venezuela was permitted to participate or represent their country's interest in the arbitration and thus remain a sticky issue to this day. So the Venezuelans, okay, are claiming that, the Essequibo has been taken out from them without any of their participation. So in October 2023, it was reported that the Venezuelan military was building a runway near the border with Guyana's Essequibo to develop the region. Now, this prompted the US and UK response by sending their military asset near the area in support of Guyana. So again, this is another potential conflict in Latin America. You can see right now, okay, there are coup as well as tension in West Africa, and it's in the Middle East, in South China Sea, and in the Korean Peninsula. And right now we have Latin America. Where else, is there no other tension? Okay, so it has become, the world is like moving on a very fast, on a very quick tangent, okay, to potential conflicts, which will be very difficult to pull back from. And this is the worrying trend that, if it, that January could be the start of something that will determine what happens for the remaining of the year. And the other thing is that in terms of breaks, the BRICS 10 begins in January. Argentina has already shown that it's not interested, so it's no longer part of the BRICS 11. So Ethiopia, one of the 5 nations selected to join BRICS starting from 1st of January, has just defaulted on its $1 billion loan. How Ethiopia progress next will give insight on how the BRICS nations chart their de-dollarization program. So there are some whispers that, Ethiopia, if it defaults, it wouldn't change its standing with the BRICS because they will just use local currencies to loan to Ethiopia. So RMB denominated oil trade could be thrust into the limelight. In fact, a lot of work in the background is being done right now. I expect more cohesiveness among oil-producing nations, although Angola has dropped out of the OPEC, but Brazil is going to enter into OPEC, and Brazil is one of the top 10 oil producers, whereas Angola is not. So interestingly, Saudi Arabia and UAE were reported to be scouring for assets with mineral resources to invest. So you can see that this could be the trend that BRICS nations must secure their local currencies with hard assets. And that is why I think we see Saudi Arabia and UAE are looking at opportunities to invest in mineral resources. And gold will gain prominence as the dollarization process escalates and more nations divest their US dollar holdings. So very long session. Back to you, Evelyn.
For those that are interested, yes, the webinar is recorded. Yeah, for those that are interested to join us on the 2024 Astrology and Global Trends membership is still open. Okay, and we are going to close the membership very soon because it's in a 1-year cycle. And I'm sure that our members that joined us last year has gained a lot of insights. Okay, the benefits of joining the 2024 membership is that you will get the 2024 Wood Dragon Astrology Global Trends book discounted off from your membership fees. That means it's like the book is free because the membership is actually 168 ringgit, and discount off this 40 ringgit is 128. But you have to buy the book from a platform, from our online publisher platform, and you can join our monthly forecast and Zoom session, get the presentation files and full video contents 2 weeks ahead before we release it to the public in the YouTube channel. And also a private Telegram group where we have a lot of discussions going on. And PC also give a lot of hints and tips as well, and foresights that will enable you to make better investment decision, potentially enhance your investment portfolio by selecting those right sectors. Okay. And then you, as a member, you will have early access to our annual astrology and global trends talk. Okay. On the annual energy. And from here, this is what our member has says about us in terms of what we have from last year and from this year as well. And our last year's track record, we have forecasted movements in uranium stocks successfully, gold prices, and the growth of Xiaomi EV sector. So as BC said, if you have, taken the action at the right time, you could have, make some profit. In fact, you will cover back your membership price many, many folds, many, many times. Okay. Yeah. So for existing and also existing members who renews and also current 2024 members, you will get a guide on your potential sector aligned to your own energy. That means through your birth chart, where I will do the analysis and check. Sometimes we are aligned to certain energies, certain types of sectors that is suitable for us, like we can see the opportunity better. So you will get the personal guide and also the monthly power date to improve your own energy field. Because investing sometimes also depends very much on intuitions in the Telegram channel. Okay, so that means you can see the timing better in investing. Okay, because every time investment is about also timing. The contents that we will talk about for the annual membership astrology talk, where we will release the content only 2 months later, is the Chiman chart for 2024. What is the potential profitable investment using Chinese astrology research, and also how to install the investment intuition into you? And will there be a market crash in 2024? So these are all the exciting contents that we will have. The ebook itself, as I say, is 40 ringgit, roughly around that, the US exchange. And the membership per year is 168. So the total after discounting is actually only 128. And if for a less than a cup of Starbucks coffee per month, you can get so much the guidance from the subject matter experts like me and also PC, where we are combined two methods together to sort of forecast what is going on month by month, and also the year's energy as well. So for those that are interested, you can get the book from this link. I later on will drop the link, and also the link to enroll for the membership as well. Okay. And yeah, we will go through the summary, PC.
Yeah.
Okay, from my side is that you need to take profit quickly. Okay. So as things might be difficult to bite through, because a row of teeth are suddenly with one young line there, and then government will weaken with military activities in different regions and continue growth of technology and innovation. So over to you, I'm busy.
Yeah, I think the summary is still the same, okay?
Uh-huh.
What conflict zones are being identified in other small pockets of the world. Just now we mentioned Venezuela, and then at the Gibraltar, Strait of Gibraltar. So corporate bankruptcies have resulted in many layoffs, but we can see this being extended to the finance industry uh, as we move forward. Okay, because I think something might have triggered the Fed into action, and uh, and that is why I think they wouldn't have done this unless something bad has actually happened, which they are now trying to salvage, but they have not made known what it is, and we can only await. Now, food inflation will remain sticky in many economies because, like just a few days ago, I saw that rice have reached another new high. Okay, and this is very concerning. And at it is there is a lot of uh, it's rainy season again, and floods are actually returning. So that could actually hamper some food production in other areas. And I think US technology innovation will continue to focus on software design, and China focus on manufacturing. New operating system coming out of China could alter dependence on US OS, and we already see it in a number of smartphone
Yeah, Huawei.
operating system, Huawei, Xiaomi, as well
Mm,
as Oppo. And the other thing is that, but US will continue with their software and design, especially where it matters on AI. And China will actually intensify its technology innovation in manufacturing. And like I think for this year, 50% of the global robotic systems were actually
from China.
yeah, all of
Yeah.
it was in China. China accounts for 50% of the upgrading of robotics.
Mm.
So that's why China is transitioning towards that. And just today, I saw that there's the World Intellectual Property uh, Organization, Intellectual Property Organization, actually came out with a new publication. And once again, China topped the amount of new patents
IP.
that
Yeah.
are being uh, uh, patented out there. In
Mm.
fact, there's a huge glaring difference between China and the US, which was US actually was in second position. And that is also because a lot of the US themselves actually have driven a lot of well-known Chinese scientists who actually help a lot of US institutions secure global patents. They have kicked them out because of racism, okay, and because of xenophobia. They actually kicked them out and then they returned to China. So right now they are actually um, helping the Chinese innovation development. So
Actually, the China government also encourage all these scientists to go back, and they
yes,
have given them a lot of incentive as well, like
yes,
housing, special housing, and all these things. Yeah.
especially the even they push quite a lot from the chip sector from Taiwan. I heard
Mm.
that some of the engineers are being lured by you know uh very very high pay grade. Okay, some could be in the millions to get them to start developing in
I'm
China.
yeah, I'm not
And
surprised.
recently, TSMC's CEO has just been fired
Mm.
because of the development in their fab in Arizona
Mm.
that has run into a lot of difficulties. Because number one, US doesn't have that kind of talent pool anymore because the US education level has actually declined. Okay, they
Mm.
don't have so many skilled workers in the technology sector, especially it involves semiconductor, because the US like companies like Nvidia, uh, uh, AMD, and all those, a lot of them are very good in chips design, okay, and in architecture. But then, like Nvidia doesn't have a fab. All their chips are actually produced in TSMC.
Mm.
So when TSMC move over there, there's not enough talent. And when there's not enough talent, they hire the Taiwanese there. And then the people, the
Got
Americans,
poached. Yeah, by
uh,
Intel, by all these other American companies.
yeah, they got pinched by
Mm.
other American companies, never mind. But then the local American workers doesn't like that.
Mm.
They don't like that. They say that, it should be Americans who are working, not someone from Taiwan.
Mm.
And they refuse to work in shift.
Mm.
So right now, the thing is, Biden promised 150 billion, if I'm not wrong, or 100 billion to actually finance the build up of the fab. And to date, most of the fabs are progressing, uh, you know, to a very high level of, they progressed a lot. But then only 35 billion was being paid, whereas they've already dumped in so many billions. But then the payment from Biden admin comes in trickle. So that's
Mm.
why TSMC have not even got a single cent from it.
Mm.
And because of that, I think they decided to fire the CEO because they spend, I think, tens
Yeah,
of billions of
bad
US
decision.
dollars. Yeah, but then they can't even start production until 2025.
Mm.
And even Intel, I think, was it Intel or another US company also said that they are postponing until 2025 because there's not enough talent in the industry. And all the while, all the chips were actually produced in Taiwan. So there's no American talent there. Okay. And suddenly the fab has been built, but then, it's not starting production anytime soon.
Yeah, because of the manufacturing technology, designing and manufacturing is both. totally two different things. I think they
Yeah.
sort of overlook that manufacturing requires a lot of process control. You can just design the chip to to whatever that you want. You pack more um items, or you pack more transistor into a chips through a design, but to manufacture is another story altogether. The process control that is involved in such design, it will be totally different. So you need expertise in that also.
Yeah. So, Evelyn, you have anything to add?
I don't think so. We will leave the Q&A session. If anyone has any questions, maybe let me just drop the link into the chat. If anyone is interested to join us for the 2024 membership, you are still welcome to do so. The book and also this one. So anyone has any questions for tonight?
I think the China market for 2024 will still be a bit of up and down. Uh, right now it's mainly because there's a lot of restriction for fund managers